Okay, welcome to the Closing Beat, everybody. Happy Thursday. Hope you're having a good day. This is our quick stock market update show that we do to cover, well, the stock market and the changes for the day. The good, the bad, and the ugly. We'll cover it all. You see a whole bunch of information all over your screen there. We'll cover most of that, but if you like, you just take a look up there below and see what we've got going on. If you're one of our customers, tonight we're doing our Wine and Wealth class on the basics. I promised I'd spend the next few weeks on my beginner investors. We treat everybody that they're the same. We pretend like you don't really know what's going on. We work you up, so that eventually you do know really everything that's going on. You'll be a pro before you know it. We invest for our clients. We're financial advisors, and so tonight we're going to do that class. If you're one of our customers, you already have the email link to join us. Also, you can go in the dojo to check things out if you can't make the class. All good with that. Well, the stock market was mixed, right? We'll just call it unchanged. Basically, nothing happened today. If you missed today and you just want to tune out right now, please don't. But if you want to, you can. Really not much happened. We've got earnings season starting here. And so it's very normal for the markets to sort of calm down, get quiet, pull back a little bit, tread water, not really much happening. And so the Dow lost 14 points today. Not a big deal. You can see that's not even a fraction of a percent, really. S&P was unchanged on the day, really flat. I mean, just identical, almost right where it started. Flat on the day, and the Nasdaq lost 16 on the day. Now, a lot of good news out there today that really didn't get reported because there wasn't much to talk about. Jobless claims, people that are, filing for jobless claims for the first time, dropped to 196,000. That's the first time we've done that since 1969, actually. So a really good number there. Dillow Research, it's been under 300,000 now for the last 214 weeks. That's the longest streak on record. Is that bullish? Is that bearish? Are you a contrarian? Do you look at that and go, uh-oh, we're about to start losing jobs here? Or do you go, that's good news, right? Market's going to continue higher. What do you think? Well, a lot of people tend to think they should move to bonds. So ICI puts out a report every week, almost comes out later in the week or earlier in the week. They put out a report that last week saw nearly the largest amount of money move from large cap and small cap funds, mutual funds, to bonds ever in history, right? It was almost the largest move, meaning money coming out of those growth funds going into bond funds, nearly the largest move in history. Small cap was basically the largest in history. It was very, very close to being the largest amount of money ever to come out of small cap stocks or the market and move over to bond funds, and yet the market remains at all-time highs, or very much near all-time highs. Here's the S&P 500 on the screen here. We're almost back to all-time highs. This is the SPY, so if you're an index fund ETF trader, that's the SPY. If you're a total return index fund investor, you are at new highs. So you're doing better at the moment, looking good there. And I believe the equal cap weighted ETFs are still beating the market cap weighted ones like the general S&P 500. This just, look, becomes more and more important. You don't just dive into one index, right? People say invest in index funds. And you want to know something, by the way? I'm going to tell you just real quick. Just give me 2 seconds here since not much is going on today. Index funds are what everybody's tried to get the masses to do. You read it in every book. You're like, well, that's what they say to do, so I'll just buy it. Now the pressure is coming to say, hey, don't you want to do the socially right thing with your investments and sort of leave out the social pariahs or companies that you don't believe in? They're not good for the environment. They're not, maybe they treat female employees differently, right? That's actually, that's something, right? So there's now this push to be socially responsible with your money. We've done it this whole time. If you don't want to invest in tobacco stocks, alcohol, abortion, genocide, whatever you believe strongly in, we can just pluck you right out of that automatically. But that's the new push. So watch, mark my words, over the next decade, we're going to be moving away from index fund investing, and they're going to start convincing you need to be socially conscious with your money. Don't invest in those other companies. So no matter where you stand on that, just know that that's the case that's coming up. Also, there was a study done. I'm going to probably steal it. I will credit them, of course, but I'm probably going to make a video out of this. One of the personal, what do they call it, financial planning companies that puts out a magazine for the industry, they did a study to say, all right, index fund investors, let's take 12 index funds, all different, and let's pit them against each other over a lifetime. And let's just see if you would have invested in one, not only what was the return, but what sort of volatility did you expect? And then just for fun, I like what they did. They said, okay, here's all these 12. They have wide ranging in return differences. Now let's just pretend you bought all 12. Let's just say you didn't know which one to invest in. You said, I'll take them all. How would you have fared? So I'm thinking I'm going to use that data and credit them for a video because, God, it kills me sometimes how people just go, I don't know, S&P 500. But what if there's something better? Like, what if you could have done better? It's something you should look into. All right, market-wise, let's go back to this here, not to get off topic. Market-wise, in the S&P 500, you had 32 names hit new highs. The good news, or the bad news is that hasn't really changed. It's been about that on average. A lot of stocks chopping around near their highs. The good news is that out of those 32 names, you had a broad, diverse list of sectors. You had everything from Microsoft hitting new highs today, new 52-week highs, just barely. And then you had like AutoZone, they hit new highs today. Those guys, they've been incredibly strong there. O'Reilly, if you're familiar with these auto parts stores, boy, they've just been killer. So a good mix of stocks hitting the new highs. So not one standout sector. You had REITs in there, you had utilities in there, so everything kind of standing out. 3 new lows on the day. That's it, just 3 new lows, and it comes from the healthcare / biotech space. Walgreens hitting new lows there, down another 2%. Sort of disaster in the short term. Humana sticks out too, hit new lows. They all did poorly. If you were to go over to our new watch list here, the XLV is the ETF that tracks healthcare companies. They were really weak today. Look at that move there. So sort of really, really weak there in the short term. Now, I want to point something out. I'm going to go to the top of the list, and I'm just going to, can you see it? Yeah. I'm going to go to the top of the list, and I'm going to just say, okay, industrials. Had a good day, right? That's a sector of the markets. Boeing was able to take a break. Boeing actually bounced off of its technical support area. So in the short term, if you were playing that support area down there, so far that trade working out for you. But, XLI. The industrials got a little bit of a break today. All in all, what's it done recently? Nothing. No real progress, right? No real progress at all as far as the industrial goes. They've been just treading water in a bullish sideways range. Financials, they were stronger today too. Not very normal. Banks tend to sell off ahead of earnings, and really we didn't pull back that much. Earnings tomorrow. But look at what happened. Just treading water in neutral to bullish range, right? We came off the lows fairly strong, and now we're trading sideways here in the short term, right? Utilities. What's going on? Trading sideways here at this range here. I'll skip this one for just a second. I'll skip that one for just a second. Energy. What's going on? Yeah, small stair-stepping uptrend, but basically trading sideways. Not a lot going on. Basic materials. You just broke out of a whole sideways range. But for now, it's quiet. The point being that mostly everything is trading sort of quiet. So if you're looking for action, if you're a new investor and you're like, hey man, it's been 2 weeks or something, I see everybody excited about the markets, you can kind of see now by just digging through these sectors. You log into the dojo, go through and just be like, man, I really don't see a lot of progress. Where do I see progress? I see it in consumer staples. XLP, if you want to take a look, it's moving back to highs. Consumer discretionary, if you want to look, moving back to highs and actually been trending nicely to highs. Communication services, recently breaking out of a range, starting to move. So this is very much a trade. They call it a trader's market. If you're a trader, you're shifting around to these different areas. If you're a long-term investor, this doesn't matter. It's just a fun way to keep track of what's going on. But if you're an active trader, you better be shifting around with everybody else or you're not really making any money generally. So it's known as a trader's market. Just thought I'd point that out. We have earnings coming up tomorrow. We got JP Morgan, Wells Fargo, and PNC Bank. Those are the ones that are going to get all the attention. The financials started. We got big name financials in there, and we got regional in there as well. Remember, I've been saying this all week. We're expecting earnings growth of only 4.3%, revenue growth to be around 5%, and most companies will have to report that they beat on earnings or that they beat the lowered earnings. I've been talking about this. But they'll also have to report positive guidance going forward. The S&P 500, I'm going to go a little geeky here, if you don't mind, for just a second. I'm going to go just a tiny bit geeky. The S&P 500 is trading at a valuation that is rich relative to history. Now, I don't mean the price of the index. I mean the forward earnings. They call it price to earnings multiple. The price to earnings multiple right now is at 17.5. Did I write it down? It's at 17.5, I believe. Historically, it's usually about 16.5, 16.4, 16.2, right in there is about the average. We are trading rich relative to the average. What does that tell you? Well, in addition to everything that I posted in the video earlier today, sort of the geeky video, in addition to that, it's telling you that we're already sort of overpriced from a valuation standpoint, and we're sitting near highs from a technical standpoint. So if we're already sort of overpriced, earnings better be pretty impressive, or investors sitting here will go, well, I guess that's about it, and start taking profits. So we really have room for some downside, in my opinion, if things don't really shape up. So far, the earnings that have come out have been good. So companies are beating. Like I said in the video earlier today, if you happen to miss on earnings, if you're a company that happens to miss on earnings, you got crushed last quarter. The average gap down was 6%, meaning the market's closed, company reported earnings. Next day, the stock opened up an average of 6% or lower. Rite Aid is a good example of that. Look, it's falling off the bottom of the screen, down 10% on the day for today. They missed on earnings, right? They're doing a reverse split, by the way, 20 for 1. 1 for 20, actually, is how you would say it. Doing a reverse split on that. I think that's April 20th. April 22nd or something like that. Right in there, they're going to do a reverse split if it's something that you're interested in. Anyways, let's go to the sectors, right? We talked about them already. Industrial's getting a little bit of a lift today. Boeing getting a little lift, and Boeing accounts for about 9% of this entire sector here. So very helpful that Boeing stopped the bleeding there overall. Financials, they'll be all the talk tomorrow, right? There'll just be nothing else to talk about. Maybe the Disney excitement. That's going on right now. But financials will be all the excitement tomorrow. JP Morgan, like I said, Wells Fargo, PNC Bank, all coming out there. Tesla, if you happen to read the news, this is misleading. Let's just set the story straight on this one. I follow the Nikkei news, right? It's out of Japan. They're not known for being historically very accurate. They're kind of like Bloomberg. They do a lot of stories and then they go, we're sorry, we messed that one up, and they pull the story back. Overnight, the Nikkei basically said that Tesla was freezing the expansion of their Gigafactory because they're not selling as many cars and demand is lower. Tesla came out today and they said, that's not true at all, right? Us and Panasonic, they're partners on the deal, we're doing everything as we planned. Nothing has changed. And the Nikkei, which we'll start reporting here later, has already come out and said, yeah, we're going to have to retract that story. So a little misleading there. The stock was lower on the day. Tesla still closed lower on the day by about 2.7%. So that's that one. I talked about Rite Aid already. That stock moving to new lows. It's a penny stock now, and they're doing everything they can to get out of that. It is April 22nd. I was just pulling it up here. 1 for 20 reverse stock split. All that means is for every one share that you own of Rite Aid, they're going to take that, and they're going to replace it with 20 shares. Or I'm sorry, I said it backwards. They're going to reverse the price 20 for 1. So you're going to wake up on April 22nd. It'll happen on that day. And the stock price will increase by a factor of 20, and however many shares you had will reduce by a factor of 20. It's the easiest way I can say it, basically. And it's a way for them to just boost the price back up again, get back on people's radars. Very common, actually. I don't know much else about the company, so I'll just move on. Costco selling off about 2% on the day. Same-store sales came in just a little lower than expected. Not bad, right? The company's still doing really well, just a small downtick there. And an interesting fact, Costco doesn't mark up anything in their stores greater than 14%. That's their markup. 14% or less. Now on their name brand, Costco brands, they as high as 15%, and that's it. That's the highest mark. They actually publicly post that, so I thought that was kind of interesting. You know what you're paying there, or you know what their profit margin is on the products. Now the other stuff they make money on, good for them. Bed Bath & Beyond, we talked about this yesterday. They missed on earnings, down 9%. They're going to post an annual loss, an adjusted annual loss is the way you have to say it. For the first time for the year, for the first time in 30 years. So investors kind of responding to that. They beat on earnings, but revenue still, they're going to show a loss for the year, an adjusted loss, and it's going to be for the first time in 30 years. That's as far back as I could go. That might be as far back as the company goes. I don't know. Amazon, a little bit lower on the day. I just thought this was funny. Jeff Bezos says, hey, you other retailers out there, why don't you guys pay a fair hourly wage to your employees, or even pay them $1 more than we pay our employees to make things fair? Challenge us to raise our hourly wage. And so all the retailers are like, ah, crap, you know, shoot, man, Amazon's ruined things for us again. Well, one of the guys from Walmart, he tweeted out, hey, Amazon, why don't you pay taxes first? Because, you know, Amazon last year had $11.1 billion in profit, and they paid $0 in federal taxes. So I thought that was an awesome jab back from the guy from Walmart to tweet out, hey, why don't you guys pay your taxes? And we'll talk about that later. So anyways, showing the unfair advantage there by Amazon. Walmart, interestingly, was up by 1.2%. And then JetBlue, I thought we'd cover that. Remember yesterday they were announcing intercontinental flights. They officially did announce that. Stock was higher by 1.3%. And if you like Uber, they're doing a thing right now. They're officially filing their final paperwork to go public. So it should be the first week or second week in May. If the markets are really strong and everybody's really excited and they do a good job with the demand and the roadshow, probably the first week in May, you could see them going public. $10 billion they're going to be raising, by the way. And they lose money, remember. You're investing in something that loses money. All right, if you have questions, I'm happy to answer. Otherwise, I'm going to wrap it up from there. We do have our class tonight. Very simple. Going to keep it a simple class tonight. Really want to help out our beginning investors because for the last few weeks, I got a little geeky doing the portfolio updates and stuff. I want the beginners to get up to speed and feel good about that as well. So we're going to go over when you log into your account, the investments that you see. What does that mean? How do those investments grow? How do they lose value, gain in value? How do you dig deeper as you get more comfortable and you want to learn more? How do you go in there and dig a little deeper? I'm going to break out the blackboard. I'll just draw it all out for you. And very basic overview. If you're already advanced and you're one of our customers, maybe not the class for you, understandably, but we'll be there tonight. It starts at 8 o'clock Eastern. Netflix, historic, so the question is thoughts on Netflix ahead of earnings there. Netflix is historically a very, very active stock on earnings. Last earnings cycle, I went and did a whole study on this one to show you like the average gain, how many times they beat, how many times the stock gaps higher, finishes strong, finishes weak. Maybe we can squeeze that in for this earnings season. I have no problem with that. See you later, David. I love it. David says, I'll be there even for the beginner stuff. David's no beginner. Bill, when do the banks report? So it'll be tomorrow morning. You don't get after hours earnings reports on a Friday. So JP Morgan, PNC, and Wells Fargo report tomorrow morning. We'll have all day to talk about it. It'll be great. Wandering Music says, how do you feel about Walgreens stock price for long-term dividend investment? You know, I see what type of investor you are. You're a bottom picker there, right? I think you have time until it settles. Stocks like this don't just fall apart and then magically recover. And I know that's hard to digest because you see the markets fall apart and then recover twice now over the last year. Stocks don't do that. I would be in no hurry to pick the bottom. In my opinion, I would wait for Walgreens to bottom, let it show you it bottoms, bounce first, and then you could buy the next pullback. If you want to keep me on this topic, keep me posted on Walgreens. I'll go and do my other stuff, but I'm happy to walk you through it. I did this last year for someone on Micron. They wanted to buy Micron. We talked about it bottoming. It then bottomed and bounced first. We said, wait, hold up, don't do anything. Let it pull back, and that was the actual entry point. Turned out really well. So we could do the same if you want on this one. Just keep me updated. Don't let me forget if you want. Yeah, Bristol Myers, all of this stuff, just looking really, really weak. It's a shame because a lot of this went from being relatively strong last year and sort of healthy in that space to pretty weak overall. You got to wonder, like, do you think this political season's gonna, you think they're gonna go after healthcare companies? Oh, by the way, what was it? The robocall law. We might finally be getting rid of those or getting some more legislation on that. Ugh, crap. What are your thoughts on Boeing? In the short term, Boeing right smack on top of some support. That explains today's bounce. Technical traders love that. I'll go over the charts real quick. Here's Boeing, and here is this prior low. All that is technical traders saying, well, it supported itself there last time. Maybe it supports itself there this time. still a lot of work to do. There's no reason this thing can't just stay sideways between 400 and like 360 for months and months on end. But in the ultra short term, the bounce today seems very obvious, at least on a day-by-day basis. Yep. Harry says, is it time to move 529 fund to the conservative bond option? Oh, there's so many things there, Harry. We may want to do that individually. Depends on how old the child is. It depends on whether they're going right to college. Depends on what fund you have at the moment. Not sure. The reason you're seeing the money move, that's that outflow that I talked about a minute ago, almost the largest in history, money moving out of the stock market into the bond market. The reason for that is retirees. We have a lot of retirees as customers. They haven't been able to reduce their risk in years, 9 years, really. They've been forced to invest in the markets. Well, with bonds the way they are, getting better and better, little by little, especially corporate bonds and municipal bonds, they're getting a little bit better. So now for the first time in 9 years, retirees have the chance to reduce some of their risk out of the general stock market into bonds. I kind of think that's what it is, because I know we have a lot of that going on here. I don't think it's people plucking themselves out of the market and running for the hills. It's pretty obvious because the stock market hasn't really fallen. Have you done a class on why you choose certain percent of investments based on investment strategy, Chris? I think I know what you're saying, like why we choose the allocations we do. I have in the past. We could address that again. I don't mind doing classes over and over again. But also on the portfolios page, we sort of talk about how we, what's the goal, what's the objective, and how we would follow that. We try to leave as much opinion out as possible. Thoughts on JP Morgan's earnings? We'll find out tomorrow. Well, I mean, might as well just wait till tomorrow. Yeah. Financial investor. Financials did well. Gold and silver did poorly. An early sign the financials expected to move higher. We'll see, right? I mean, I would hope so. I think financials kind of have the all clear from here to gain a little momentum. It's, I know, tough with still the uncertainty now being pushed out to maybe next January from the Fed. However, it's not like banks are doing poorly. Banks have just needed a catalyst to get people interested. I really kind of think that Fed sell-off and that immediate snapback is a bullish sign in the sort of short to mid-term. Now, if tomorrow we find out JP Morgan misses by 20 cents or something ridiculous, probably not going to happen. But if that does happen to be the case, all bets are off. I mean, we're done. We'll see. It'll be fun to watch. Josh, thanks for the Uber information. You were trying to find this. It just came out, I believe. Like, you can see them talking about it back there or whatever. So, yeah, I mean, it's literally just coming out. But we'll cover it. Happy to cover it. Remember, they lose money. You are betting, as the IPO stands right now, you are betting on operational excellence and almost them destroying Lyft to be at the valuation they're at, in my opinion. You can disagree. I don't mind when people disagree with something I said, because, that's what makes a market, right? I might believe one thing, someone else believes the exact opposite. The only loser is the person that loses money. Morningstar says, as a beginner, I appreciate the time and effort. Sweet. I love it. Well, we'll see you later tonight. We will cover that. I'm going to get ready for that. And I think that's all I have for you. Enjoy the rest of your day. If I helped you in some way, hit the subscribe button. That's all I have. We'll see you later or tomorrow.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.